Hey, this is Warren Redlick. Tesla's Q3 earnings call is coming this Wednesday, October 19th, 5:30 p.m. Eastern. This is going to be really important, and there's every earnings report comes with a slide deck that breaks down a lot of details. In this video, I'm going to show you 10 things to look for when that slide deck comes out around 5:30 p.m. this Wednesday. Are you ready? Let's go. You can see here on the investor relations website that there's the spot where you have the various documents and events, and you can see production and delivery press release, that's already out. But right here, there's an empty spot for the shareholder slide deck. That's where you're going to be able to download it. You can download the previous slide decks here and here. We're going to go through the Q2 slide deck to show what's going to matter for Q3. So this is the financial summary page from the Q2 slide deck. What you can see is you've got total revenues. And for Q1 22, you got automotive revenue up at the top, auto gross profit, auto gross margin. We're not going to talk about that yet. Right now, we're looking at total revenue for the company. This is auto revenue, solar revenue, energy storage revenue, all revenue for the company. And you can see that the numbers have been rising from 12 billion in Q2 21 to up to 18 billion, 18.8 billion in Q1 2022. Then it dropped in Q2 2022 because of the Shanghai lockdown, reducing the number of deliveries. And what are we seeing for Q3? Well, what we know is we had 344,000 deliveries versus 310,000. There were 310,000 deliveries, leading to about $19 billion in revenue in Q1 2022. Going out to Q3 2022, 344,000 deliveries. It's an extra 34,000 deliveries. Now, I did some rough math. I'm not saying this is perfect math, but Tesla does a little bit less than $70,000 in total revenue per delivery. That's not a fixed number. You know, there's an average selling price for the cars, and Tesla sells other stuff on top of the cars. So if it's $70,000 per delivery, and there's, rising, Tesla has had rising average sale prices for the last few quarters, that should be taking even more effect in Q3 than it has before. And then if we see, we're going to talk about this later, if energy storage and solar deployments go up, then you also would see another rise here compared to Q1 of 2022. I'm focusing on comparing to Q1 of 2022, not Q2, because Q2 was an off quarter. Anyway, James Stevenson is forecasting total revenue of around $22 billion or $22.4 billion. If they hit $70,000 per delivery, which again is a little high, but if they are able to hit that, that would be $24 billion in total revenue. So when the slide deck comes out, turn to the financial summary page, it's a few pages in, and look for Q3 2022. Look to see where this number is. If this number is significantly over 22 billion, that's a good sign. If it does reach 24 billion, as you guys know, I'm usually optimistic, but if it does reach 24 billion, that is a huge number, and that is a really good sign for everything else that's coming. Not just for this quarter, but for 2020, for Q4 and for 2023 and beyond. If they can hit a number like that, really, really good sign. Next up on the same page, we've got gross margins that I wanted to look at. So we're going to start with automotive gross margin. Automotive gross margin was rising. It was 28.4%, then it was 30.5%, then it was 30.6%, then it was up to 32.9%. And with the Shanghai lockdowns, we saw auto gross margin drop to 28% or 27.9%. My gut is with deliveries going up, auto gross margin should also be going up. With average selling price going up and with Tesla continuing to find cost savings, with the mix of vehicles shifting more to Shanghai and less in Fremont, and also the new factories in Berlin and Texas, they're going to be more efficient long-term than Fremont. So I think this number may hit 34% auto gross margin. And then you've got GAAP gross margin, which also is rising 24, 27, 27.5, 29, and then drop back to 25. This number might top 30%. When we look at Q3 on this row, GAAP gross margin, I think we may see that number go over 30%. Anything over 30% is a good sign for Tesla, not just for this quarter, not just for Q4, but 2023 and beyond. We love seeing rising margins. Rising margins means greater profit. The margin is the difference between what you sold a vehicle for and what it cost you to build it, or what you are selling your products for, your total revenue versus what your cost. You want bigger gap between revenue and cost, and that means you're making more profits. That's good stuff. I got two more pages of the financial summary page, two more ways of looking at it. One, we're looking at earnings per share. This is really the big nut. This is the one that Wall Street looks at. Earnings per share. Wall Street, for some reason, looks at non-GAAP earnings versus GAAP earnings. I don't know why. And you can see Q1 2022 was $3.22 a share, dropping to $2.27 a share in Q2. That's a pre-split number. Pre-split $3.22 works out to $1.07 post-split. So these numbers are going to be divided by 3 in the Q3 slide deck. So this number is going to show up as about $1.07, and this number is going to show up at, I don't know, 75 cents or something like that. But the question is, what's that number going to be for us? For me, if you went from 310,000 vehicles delivered in Q1 to 344,000 vehicles delivered in Q2, with all the other things going on, I would expect this number to be higher. Wall Street estimates are down around $1 a share. Why would earnings per share be lower in Q3 versus Q1? I don't know. James Stevenson's around $1.27. I think we might see $1.50, but anything over $1 is good news here. Really, I think we should be looking at $1.30, $1.50 even possible. There's a whole bunch of ways this breaks down. It's really hard to, James Stevenson does a really detailed analysis, and he came up with $1.27, so he's probably close to right. I just think that some other things might break in Tesla's favor. There might be some other good news. In particular, I think energy storage and solar deployments might be up, and that could pump things up a little bit as well because they're now profitable. So if all that comes together, and average selling price, I think, is going up faster than people are expecting, while costs, they've managed to get some cost control. So put all that together, should be at least $1.25 a share. $1.50 would be like hitting a massive, like, grand slam home run. So whatever we see, but again, anything over $1 is beating the street. So that's good news. I think we're going to see, like I said, over $1.20, maybe even as high as $1.50. $1.50 is probably too optimistic. You guys know me. I tend to get carried away. But $1.25 completely within reach, and that's a big jump over the street. Okay, the last thing I want to talk about on this page is free cash flow and cash equivalents, which you can see is free cash flow is how much cash is going into Tesla. How much are they growing their cash pile, basically? And you can see that the cash piles, and it's a little complicated, there's some other factors in there, but you can see their free cash flow in Q4 2021 was $2.8 billion, then it was $2.2 billion in Q1, and then it dropped to $621 million in Q2. Now, Q1 was down compared to Q4 the previous year, I think because they paid off some debt. So there's no debt left to pay off. I think this is going to be over $3 billion. Then you've got cash and cash equivalents. This is basically Tesla's cash pile. They've been around $16 billion. Then they went up to $17.5 billion, $17.5 billion. They went up to $18.3 billion in a bad quarter because they just don't have any more debt to pay off. Now, if we're going to see $3 billion in free cash flow on top of $18 billion, we should go over $20 billion on the cash pile, and we may hit $21 billion on the cash pile. That's another good number. That's the kind of thing we want to see. I'd be surprised if it's not over $20 billion. So this is really good news. This helps Tesla weather any financial storms. If there's some kind of economic crisis or other big problem, having a big cash pile helps. And if you want to build gigafactories, more cash means more gigafactories you can build. There's some people who want a share buyback. I'm not a big on the share buyback concept. To me, the share buyback says we don't have anything good to do with our cash, so we're going to give you money. I want Tesla deploying that cash in ways that are growing the company rather than giving me cash back, or rather than raising the share price through an artificial technique. That's my opinion, but check out my video with Alexandra, and I have a previous video with Mayor Thacker. They both support the share buyback. I think it's the wrong call, but doesn't matter. The big question is going to see, are we going to see this cash and cash equivalent pile go up? I think we're going to go over 20 billion. So now we're on the operational summary page. We're no longer on the financial summary page, and you can see global vehicle inventory. Tesla decided to stop the rush of jamming out as many cars as possible at the end of the quarter. A bunch of vehicles were on ships. I think we're going to see this number go up. Historically, we've seen inventory as high as 9 days worth of vehicles. Lately, it's been 4 days of inventory or 3 days of inventory. This is probably going to go up to 5 or 6 days of inventory. That's a guess. I could be wrong. Maybe it'll go higher because they definitely, and I don't know whether, I assume that having vehicles on ships on their way to delivery probably counts as vehicles in inventory. So this isn't a huge number. It's just useful. It's a good sort of guidepost to see where are we. If this went over 10, that might start to becoming a concern if we thought it was rising, but I don't think we're going to hit that. Then the big thing that I'm looking forward to is solar deployed and storage deployed. We saw that solar deployed went up dramatically to 106 megawatts. That's big. And then solar storage deployed has been rising. It used to be bigger before, then there was a slowdown. Now we know Megapack factory is ramping, Powerwall factory is ramping. We're seeing a lot of production of both of those. This could be 3 gigawatt hours. Right now it was 1.1 gigawatt hours in Q2 of 2022. If things go nuts, this could hit 3 gigawatt hours, but I'm looking for this to be over 2 gigawatt hours. That would be a really positive sign for Tesla. I would love to see that. They are unquestionably, the news is that they are ramping Megapack. They are ramping Megapack production. They're ramping Powerwall production. Something like 6,500 Powerwalls a week and 42 Megapacks a week. That would work out to 1 gigawatt hour. If you do 6,500 a week of Powerwall, that works out to 1 gigawatt hour for the quarter. If you do 42 Megapacks a week for Tesla, for Megapack, then you're doing 2 gigawatt hours a quarter. That would be a total of 3 gigawatt hours a quarter. So splitting the difference, I'm calling it 2 gigawatt hours here. Should be close to 2 gigawatt hours. That's a really positive sign for Tesla going forward. That's probably $1 billion or more in additional revenue for the company. And they're starting to turn profitable, so that's a really good sign. This one isn't, I don't expect anything to change on this one. This is the installed annual capacity. We see this every quarter in Tesla's slide deck, and I don't expect to see anything different. The blue box shows what they reported in Q2 for installed annual capacity. I think we're going to see the same numbers, that Model S and X are going to be 100,000 and Model 3 and Model Y are going to be 550. It's possible they're going to increase that a little bit, so it's just something to look for, but everything, I haven't seen any indications. We did see that they seem to be increasing production of Model 3 and Model Y in Fremont. So maybe that gets pushed to 600,000. Maybe Model S and X get pushed to 120,000. I don't know how much that matters. What really matters is how many vehicles they're pumping out and how many vehicles they're delivering. But we should see some improvements there. Then Shanghai says greater than 750,000. We think they're at 1 million. Are they going to up that number? Again, this isn't like material. This is just like a good thing for us to see. For Berlin and Texas, capacity greater than 250,000. As far as I know, the target is to reach 5,000 a week, which is 250,000 a year by the end of this year. So there's no reason to adjust those numbers up yet. And then in the red box, we've got Tesla Semi. Tesla has said they're going to start delivering Tesla Semi around December 1st. So are they going to update that number from in development to actual production? It's October. If you're going to deliver December 1st, you should be in production. My gut hunch is they're going to leave that as in development, even though they're likely in production. Maybe they'll indicate it's in production, and then the volume number should be very low for Semi right now. You know, maybe 1,000 maybe it's 1,000 a year. Ultimately, that will be a much bigger number. We're going to see Tesla Semi rise to maybe 100,000 a year or 200,000 a year. But in the short run, that should be a low number. We'll see where it goes, but that's something to watch for. I don't expect Cybertruck, Roadster, Robotaxi, and others to move out of in development. And then, are we going to see something else? Are we going to see a category for bot in development? Maybe. It's just kind of a fun thing to look for. It's not, again, I don't think this is material. This is not like a significant impact on short-term or even medium-term numbers that we're going to project for Tesla. It's just good to see where they are, where their thinking is on this number. Okay, the last page I want to talk about from this slide deck is towards the back of the slide deck. This is like a consolidated financial statement number. You can see you've got energy generation and storage. That number has been approaching $1 billion for a while. They've been bouncing around 800 million, 700 million, 600 million. They popped to 866 million in Q2. And everything I'm seeing, energy storage is rising and solar is rising. So that number should jump over $1 billion, maybe even $1.5 billion. It would be really nice to see this number pop to $1.5 billion, to 1,500 instead of 866. But even if it just goes over 1,000, as in $1 billion in revenue, that's a great number to see. And the other thing to notice is gross profit. What we saw in Q1 of 2022 was almost $5.5 billion in gross profit, dropping for Shanghai's lockdowns down to $4.2 billion. This number could pop to over $6 billion. Again, these are just good numbers. You know, when you're looking long-term at Tesla, you want to see rising profits. If this number pops to over $6 billion, that's good long-term profit story for Tesla. Now you're talking about $24 billion annualized, and it's going to go up. You know, these numbers all go up. As Tesla grows, these numbers all go up. So this is great stuff. Now, of course, if everything goes well with Tesla, we all become Teslanaires, right? The stock rises, the good numbers means the stock price goes up. Wall Street doesn't seem to get that, but if we see like $1.50 a share, this thing, when you look at the earnings per share, this is the big number that everybody's going to look at. When you see $1.25 a share or $1.30 a share or $1.50 a share, it's not so much important for where Tesla is today. It's important for looking for where's Tesla going to be in 2023 and then later. If we hit $1.50 a share in Q3, again, probably overly optimistic, then where are we going to be in Q4? Q4 might be pushing $1.80 a share. Maybe Q4 in my dreams hits $2 a share. And what does that tell you about 2023? If we can expect quarterly earnings per share of being $2 or more, in 2023, that means the annual earnings per share in 2023 is $8 or more a share. And maybe it's $10 a share. I think James Stevens is up around, he's over $10 a share for 2023. I think we're $10 a share in 2023 and possibly $12 a share. And where does that take us in 2024? And when you apply a reasonable price earnings ratio to a fast growing company that's got massively increasing profit story, you end up with a much larger share price. That's why I made a video in the past that I think Tesla's going to 4x to $1,200 a share in 2023, probably by early 2024, that I thought it was going to 4x to $1,200 a share. Now with the share price falling, now it's a 5x. It's almost a 6x. We're looking at really, really positive story, looking a year plus down the road where Tesla's going to be. And this quarter's numbers are going to give us a hint of where we're heading. As always, check out the t-shirts at elonbits.com. Please check out my other videos. Support this channel on the Locals platform, on Patreon, or as a YouTube channel member at the exclusive content level, and on the other platforms. You get early access to a lot of my videos, probably including this one. Please like this video, share it with your friends, and subscribe. And thank you so much for watching.